Hey everyone, this is Marathon Money Plus. Thank you for coming out. I'm sitting here with Derek, and you guys already know Promethean Investing. Derek Invest. He's been on the show a couple times. He might is sooner or later he might be permanent. He might be permanent,
Right.
man.
That's
But
what
we were
we were just talking about that
yeah,
behind,
yeah behind the
before we got
scenes.
started, which we always do, by the way. It's we get going. Thank
We
God
get going,
Kenny
but I
shuts it
want to get
down.
back on the conversation where you was talking about scaling and getting into position because we're thinking about Derek done this before. He's done a subscription where he gives out trades and tells people how to build a portfolio and actually builds a portfolio with them. Actually buys the shares and stocks. He did a subscription like that, but he hasn't done it. We're thinking about bringing it back.
Right, 100%. So okay, so let's pick back up where we left off. So a lot of these subscription services that exist, they'll talk about buying this stock and buying that stock, and that's a good thing, right? They're showing you the positions themselves, why you should believe in them, why you should buy them, why you should sell them, or whatever it is, right? And so what I specialized in because of my background coming from a financial advisor, right? Working at Merrill Lynch, working at Wells Fargo Advisors, then running my own shop was what a lot of people don't realize is there's another very key component in maintaining the discipline, and that component is the only way you can be successful with the other stuff. And that's how to actually build a portfolio where you're scaling in and out, what percentage you're scaling in and out, how to monitor markets, how to identify when the market's going to turn over. And so you're constantly buying and selling like a professional trader, a professional portfolio manager would, right? But you're doing it with guidance from someone like me who's been doing this for 25 years. I ran that service a couple of years ago when the market was dropping, and actually everybody that was in my service at that time, the market began to drop. I remember it was like the second week or third week of December in 2021, where volume just went through the roof in the Dow, S&P, and NASDAQ. You could see that it was a top. It was most likely started by tax selling and then just taking gains for the year. I mean, if someone asked me to guess where all that volume came from, that's what I would say. But in today's world, where it's all about following a trend, there's tax selling that starts, if institutions start to take too much profit, that is going to lead to a down trend. It is going to roll the bull market, not because of anything fundamental, but because that's the way today's market is run. It's all machine learning, machine trading. It's all set up through algorithms. They're using the same support resistance levels. They're using all the same levels. So if they start to pop, all of a sudden the machine says, hey, the money's made on the way down, not on the way up. So we start to pull back down. And at some point, humans step in, which is what you saw in October of 2022. But during that service, you got updates 3 days a week from me. We profited 26% on the way down. So not only did you not ride the market up and then give it all back and keep buying in, but you were safely, or as safe as you can be when you're investing and you're shorting, you were scaling in and out of those markets all the way through to October 2022. They announced the Ukrainian war, and I came on. We shut down all shorts and said, buy everything. And here we've been going ever since. And that was a service I was running. It's not as sexy. It's not here's a 10,000 return stock. Here's a stock under $5. But what it does do is it teaches you how to set up an actual portfolio, how to run a portfolio, scale in a position, out of a position. So anyway, Kenny, that's what we were talking about. And the reason I brought that up was because I was telling you that it's not that it did poorly. It just didn't perform to the way I thought it would in the amount of energy I was pouring into it. Because again, it's like you're saying, hey guys, look, if we hit this price move, we're going to sell 2% of this position. We're going to sell 5%. It's not fun, but it makes money year over year. You keep your profits, and you learn how to identify when trend changes are actually coming before they come, not after, right? I mean, I don't need anybody to tell me we're in a downtrend when we're down 16%. Yeah, I get
100%.
it.
100%.
You know what I mean?
Man, but guys, I want to tell you, if you guys want me to bring it back, you want me to ask him to bring it back. Definitely, we definitely want to see that come back. We definitely want to see that kind of level of trading and making consistent money. I know a lot of people are always looking for different ways to make money in this type of environment. But let's get into it. Let's get into it. Dow Jones touched 45,000. We almost with the Nasdaq, we almost touched 20,000, and that well over 6,000 now. What's your opinion on that?
Well, so right now it's just a screaming bull market. There's indications maybe through the economy that you should pay attention, like to be aware of what's below us. Like a lot of guys are saying, oh, we're in a situation where this flash crash can occur. Don't listen to any of that noise. I mean, look, there always has to be that noise. That's what makes a market exciting. Right now, it's a bull market that's raging. That's all there is to it. And until you see institutional money, institutional volume and trading activity step in at a high level, until you see that, the coast is clear. I will tell you this. If there's any indication to be cautious, it would be the Dow. So not necessarily in this last week, but in the weeks before, I have been tracking this. I have students that do follow me, and they are paid. Like, we work together one-on-one, which is something that I really specialize in. I believe everybody should work one-on-one to at least establish who they are as an investor and a trader. And I've been talking about this. It's been going on, I don't know, I'm going to say 5 weeks. It started with the 1-minute chart on the Dow, and it has reached the daily chart now, where you're starting to see, anytime you're seeing large price moves up on large volume, like large candlesticks, that will traditionally mean that that's institutional. Okay. Why does it mean it's institutional? Because there's only one group of people that can move an index, that can create massive trading activity on an index. That group of people is institutions. It's an institutional desk. What desk it is, I don't know. That doesn't concern me. I'm not really worried about that. And when you're seeing up bars in a rising market, when they're big, when it's a big move, that means those are block trades. And who does block trades, Kenny?
Institutional traders.
That's it, baby. There's only one group that does block trades. There's only one group selling 100,000 shares at a time or buying 100,000 shares at a time, and that's institutions. So if they're creating that and that's pushing price up, that's selling. Now, once that shows on a weekly chart, once that comes into a weekly chart, if it comes into a weekly chart, if it does, then that would be the time to sell, and I might then get a little negative. Now, remember, the market is a giant cruise ship. It's the Titanic. Just because you see this massive volume on a weekly chart doesn't mean the market rolls over tomorrow. For example, back in 2021, it showed up in the first or second week of December. The market didn't roll until the beginning of January. You have time. So right now, I say we're in a raging bull market. Bitcoin's enjoying the same. I saw it's back over 100,000 this morning. I mean, right now, you're just riding this, I hope. I hope that you're wise enough to take profits. I've been pushing a lot of people to go into bonds, sell off some of the stocks, sell off some of the equity, sell off some of the Bitcoin, and you should be buying some bonds. We talked about the 20-year treasury last week, I think, Kenny, or the week before, and it was down at 90. And I said, you should be buying this. Anything down at 90 on TLT, the 20-year treasury, you should be buying. And right now it's at like 94.50. Right? Oh, so it's not if somebody thinks making 4.5% in 2 weeks on something like a 20-year treasury isn't sexy, they should quickly leave the market, because that is an easy, nice move. If you're making a couple percent a week on a 20-year treasury, you're stoked. All right. That's 8% a month. That's 96% a year. Any of you that don't know the rule of 72, you should learn about it. If you're making 96% a year, you are the best investor in the world. You have beat everyone. So hats off. Remember that. So yeah, that's what I think. I think right now, Kenny, it's a raging bull. I think you should be aware of what's below you, and you should have a strategy to identify tops. If you don't, you need to start figuring one out.
Or you need to get on one of our platforms so we can help you. That's pretty much it. So I want to bring up that this past week coming up, today's Sunday. For you guys who wants to know, we're recording on this on a Sunday. Last week with so many stocks flying up in this bull market, it's probably going to be like this for the next 4 years. It's That's kind of my prediction, that it's probably going to be a raging bull market for the next 4 years. I don't know what you think, Derek, but I'm looking at the Dow, I'm looking at the indexes, and it just looks like this is not stopping. More people are flooding into the market, and there's going to be a lot of stocks that are going to make a lot of profit from this. And I'm telling people right now, take your profits early. Have a goal in mind of taking 15%, 10%, 8%, 20%. I wouldn't do anything more than 30%. You know what I mean? Learn how to take profits off the table, because in a bull market, you never know when it's going to turn around.
So as far as a bull market goes, I've been following. There's something I believe in very strongly. When I got into wealth management 25 years ago, everybody was talking about this globalist society we were going to live in, or we were transitioning in, and it was obvious to me that it hadn't really happened yet. There were borders everywhere. It was very clear that we had not turned into a global society yet. But Kenny, I'll tell you, I think so. There's two things that I think. One, I think you're right. I think the bull market goes on for quite a while. That does not mean a 20% pullback, by the way, everybody, is not the end of a bull market. All right. That's not the end of the bull market at all. In fact, even a 30% pullback is not the end of the bull market. If you don't believe me, pull up a chart of the S&P and go ahead and
And
take
you'll
a
see it
look.
everywhere.
Right.
You'll
It's
see it. You'll
everywhere.
see it everywhere. It's
Everywhere.
everywhere.
And,
Let
and so if we are global now, if we are in fact global now, where's all the money coming from, Kenny? Most likely where it's coming from is all over the world. So before, because we were these sectioned countries, it was like the US was a market. So the big fear back when I got in, just so everybody knows, I don't know if you're younger or not, but 25 years ago, the big fear in the market, there's always a fear in the market, everybody. That's why it's called climbing a wall of worry. But the big fear back then was the retirement generation. The boomers right now was the fear. Why was everyone so afraid of these people? What was the big fear? Well, the big fear is they were retiring in massive numbers. They're the biggest generation in this country. And when you retire, you don't put money into markets, you take money out of markets. So everybody was terrified that it was the end of the market. We have lost the biggest generation. Not only are they not putting money in, they're taking money out. All right. Here's what we didn't know, because life doesn't work in a vacuum. What we didn't know was that particular generation, which, by the way, right now still leads today's market. They weren't going to retire like everybody else. They weren't going to sit in a recliner and get drunk until they died. Right. Which their parents, that's exactly what they
see
did.
what they did. Their
That's
parents
what they
exactly
did.
what they did. They sat in
So
and they
we
drank and they died. But this is a whole different generation. They're actually keeping
different,
their money in the market so they can make more money. And
more,
we
more,
have to
more. And they're
adjust
still
to
looking for
that.
more.
And they're still looking for more. But that's actually a good thing for the younger generation. Good thing
Yes.
for us, actually, because now we
Yes.
don't have to deal with this massive amount of pullback. It's like we have an opportunity here to, let's say, to leverage on how much money we can actually make if we're smart about it.
I agree.
If we are focused. And I'm not saying that, and I want to make sure this clear. You don't need to be a a super savvy stock market trader, super savvy investor. You just need a plan.
100%. Kenny, let's touch on that. So I'll finish my last point. We got to touch on that, having a plan, because I'll tell you right now, my belief is someone with a plan who is not a good stock picker, who doesn't really even know that much about markets, will outperform over the long run the best stock pickers, the most aggressive buyers and sellers. Someone who says, I know how to pick a top, I know how to pick a bottom. If you have a real plan, let's touch on that. But to finish the story of the bull market, so there's always a fear, right? So today the fear is like AI, or not the fear, but like AI will collapse, this will collapse. The fear crap, push it aside and just look at what's going on. Right now, markets are going up and money is flooding in. I think that money is coming from the fact that the United States is going to be the global hub. I think we're going to be the global financial hub. We are the state. I don't think that US is going to end its world currency reserve status anytime soon. I think Kenny, me, and everybody listening here will be long dead before anything like that happens. we're going to head into a globalist society. China's going to be industrial. South America is going to be oil, like energy. We are going to be finance. I mean, it's all being subdivided, right? Over in India, that is all a lot of automation stuff, a lot of customer service stuff. And there's going to be people in those societies that are going to absolutely excel. They're going to blow up, right? If you understand customer service, if you understand how to run a company, if you understand that what people need, and you're running something out of India right now, and the reason I'm saying India is because that country right now has some of the biggest performers in a global scale of companies right now in the world. They are making more money in India per capita each year than any other country in the world. They are running and gunning right now. So that's why I'm using them as an example. So I think
what you're talking about, though? You know
What's
exactly
that?
what you're talking about? You know what you're talking about? Market conditions.
Right.
You're saying the market conditions right now is perfect to make money. We're in a prime location where the United States is going to be the financial hub. We're in a prime location where the world is starting to evolve in a rate where India, China, third world countries can actually get involved in our
it's finally happening.
economy. And you have this is the perfect opportunity to make money. I want to give a great example. I want you to look at Supermicro computers. If what happened to Supermicro computers happened 10 years ago, Supermicro computers would be a penny stock. Period.
100% bankrupt.
Period. And the reason why I think what Derek is saying is 100% accurate. Number one, of the elderly that are supposed to take their money out of their market is not taking their money out of their market. So you have those slew of people. Now, number two, you have the barrier of entry to get into the market is so low now. It's almost impossible not to be in the market at this point. Now you have other countries coming in that can be part of the market, which was harder 10, 15 years ago. Now it's 10 times easier to get into the market because all you have to do is open an LLC. An LLC could cost you $100.
Unless you're in California, then it'll cost you $800.
but it's the thing about it is it's what you're saying is just about market conditions, and it goes back to you don't need to be really a super savvy tech person. All you really need to know is the basics, and the basics is understanding where you're at, understanding that okay, the next play is AI. Like don't sit here, like just have the mindset to just, even if you're not like, oh, I'm not a business person, I'm not this, like just take a look around. It's like if you're buying Amazon, maybe you should invest in the stock. It's really like very simple. You're using ChatGPT. Maybe you should start looking into AI.
Agreed.
I drive a Tesla. Maybe you should start buying a stock in there. All I'm saying is that if you just look around the household products, just around your house, and you use them, put money into them.
Especially if they've made your life better. Like I would add to that just that, look, if anything you use that is making your life better or changing the way you do things, if you buy that, you're winning. I listen, my wife, she's been in the fashion and hair industry, beauty industry for 25 years. And she was doing somebody's hair the other day, and she was telling us how she when she found out about Netflix and she got a Netflix subscription, and she was a school teacher, and she said, I got a Netflix subscription. Next thing I know, I bought the stock. She bought her house with Netflix stock. She bought Netflix because when she tuned into it, she liked the idea that she didn't have to go to the on-demand and search for a movie and all this crap, that she just turned on Netflix and there was just a slew of movies in front of her. So she bought it, and then she bought a house with that money. And then the next thing that she did was she bought Zoom because when I say she's a teacher, she's an educator. But she's an online educator who does one-on-one. She's like very high ticket stuff. And when she did Zoom, she's like, oh my God, because she would have to go to your house before. She would have to like go to you. All of a sudden it made her market bigger and she was able to jump on. So she bought Zoom and it turned her into a millionaire. And just I mean, she didn't do anything, not earnings, not charts. I talk about volume, trading activity, institutional money. Like, we're really nitpicking. This is for people that are being active. Look, if you're just looking to invest, you don't have to be a genius. You don't even have to know anything. Just live your life. I think Kenny's spot on, man. I completely agree.
It's like investing is so simple nowadays. And the idea of that woman buying a house because she just said, you know what, I'm watching Netflix. I'm gonna just buy the stock. You know how many comments we have on Apple Podcasts where people would tell me, hey man, just listening to you guys, I made an extra 100K this year. And it's just, we're not giving like crazy, and like, you don't understand. That's why I love what Derek said in the beginning of the first 2 minutes. None of the stuff he's talking about is sexy, and none of the stuff we're talking about is sexy.
It's not.
The money he made in that year all came off of 15, 10%, 20%, high 30. And sometimes we got home runs. We got 200%. But like,
sure, you'll hit
there
them.
there was more of the 15, 20, 30% holds that he just, okay, I'm at 20%, we're out. I'm at 15%, we're out. Then wait for the market to draw back. That's why we were telling you that you can go on the chart and look at 20, 30% pullbacks. Those are nothing. Those are opportunities to get in. That's and right. Make additional, even if you the 30%, you say, okay, 30% pullback, or maybe I'll get in and I'll get 40%. I wouldn't even think like that. I would say, okay, I see a 30% pullback. I know immediately. This is what I'm saying. The basic understanding is like, I know I can get a 10%, 15% profit because I know the bounce back alone in a week or two is 15%.
Right. 100%. Listen, here, like, let's even just give quick numbers so people realize how well you really need to do to become very wealthy in a stock market, right? Let's just say, like, so if you don't know what the rule of 72 is, it's the most simple thing in the world. You just take the number 72 and you divide it by what your return is in the market. Okay, so if you're doing 20% a year, you take the number 72, you divide by 20. And that gives you 3.5. That means every 3.5 years, your money doubles. Now watch this. You're 20 years old, right? You're going to live to be, we're going to use a round number, 62. And I'm doing that because actually let's do, so it's 3.5. We're doing 3.5 years. Let's say 62 years old, right? And your money doubles every 3.5 years. You have 10 grand. You're 20 years old. Watch what 10 grand turns into with a 20% return per year by the time you're 60. So you have 40 years divided by 3.5, and we'll even lowball it. We'll just say that's going to be 12 flips. Your money's going to flip 12 times by the time you're in your mid-60s. You have 10 grand at 20. Ready? You're just making 20% a year. Your first flip, your 10 goes to 20, 40. Let me put this, 60. Wait, 40, 80. 160, 320, 640, 1.2, 2.4, 4.8, 9.6, 19.2, 19.2, 38.4. With $10,000 making 20% per year, you have $38 million by the time you're 65. That's 20% a year. This is not genius stuff. So again, how did I get that number? And the number 72 like divided by your return.
Yeah, half of the crazy part is half of that is given to you in a given year. If you put your stuff in ETFs and index funds, half of that is already 8% of that is kind of already given to you yours up front. So really, you're really at the maximum. You're really only fighting for 12%
a year, 12% a year. And guys,
and
that's
you can do that with one or two stocks.
With nothing.
We're like I want to tell you how easy it is. All you really have to do is risk management and discipline.
That's it.
That's it.
And the best thing you can do is know yourself. Kenny was talking earlier about like, hey, when something's up 20% or 30% or 15%, you get out. Well, let me tell you this. Let me add something to that because I don't think a lot of people realize how personal investing is. When Kenny said it pulls down 30%, it's an opportunity to buy. That's absolutely correct. But watch how easy it is to know when to sell. Because we're all different, we all have different feelings. Feelings are what drive markets. Feelings are what drive you every single day. So let me tell you this. If you're looking, you build this portfolio out, and all of a sudden your eyes start to light up every day that you're looking at your portfolio, you go, oh my God, look how much money I'm making. When I start doing that, I sell. Because I know me. I've been doing this for 25 years. When I start getting greedy, it's over. I got to get out. And let me tell you something, that will most likely apply to you as well. And that happens over time. And I don't mean long durations of time. You can start investing very small. The greedy you, the inner greed in you will start to pop out real fast. And once it pops out 5 or 6 times, you'll know that when you get greedy, it's time to bail. Or maybe you're one of those hopeful people who thinks it's always going to go up, but you're still going to have this instinct. You're going to start looking at a certain point. And at that point, then you're going to go, no, it's going to go higher. It's going to go higher. And then every time it doesn't go higher and turns on you, you just learned that the greedy you was right. And so really listen to you. It's not even so much about a number. You will get greedy, trust me, because you're a human being. You'll also get fearful, and you'll learn when to ignore that and when to pay attention to that. And the best thing you can do to avoid fear is just turn off mainstream media. They're full of shit anyways.
100%. 100%. I like Jim Cramer, but he's always wrong.
Well,
he's always wrong.
Dude, this guy.
You wonder why he's making money, because he hedges everything.
And also because he's fun. He's also fun. Yeah. Hold on. He's hedged. So, Kenny, that's a beautiful point. He's hedged his entire career. What do you think that show is? That show is a hedge. That show hedges him. And he's smart. He made his money in finance, and now he's a TV personality. So, like, everybody busts on Cramer, and it's funny, man. It's funny to bust on Jim Cramer. And he has so many bad calls. It's great to, like, torture the guy. But also, he does run through 40 stocks an hour on his show. There's zero chance he can get it right.
Yeah, there's zero chance.
Zero chance. But he's fun to make fun of. Like, it's great. Like, you're like, oh, here's the Cramer thing. Like, as soon as he says we're going like to some new skyrocket number, everybody's like, get out, get out. The fact is, most of the time he's right about that stuff. But he's a human being that works in mainstream media. I remember when he screwed up the bottom back in 2009. And it was like 3 days before the bottom. And he said, get out, sell everything, buy CDs. We're over. The U.S. is done. Now, a lot of people were like, was he helping his buddies? Because 2 days later, we bottomed out and we took off and we've never looked back. Oh, was he helping his buddies? Was he doing this? I just think it was psychological. I think the dude has to live. If you didn't live through that, you have no idea what that was like. That was so horrific. I didn't sleep for 3 years. It was such a bad environment that, like, if you had to live that for an hour every day live on camera, I don't know how anybody could get that right. Just because you're a person. You're a person with a brain and with feelings. You don't think he has investments that were getting torched? He does. So he had to fight every human emotion. He got it wrong. But I really just believe that, he is the mainstream media. Trying to live through that, listen to that crap all day. There's no way he could get it right. There was no way he could get it right. So always remember that, guys. Even when you're listening to anybody, they're in this too.
Before we get off, man, there got to be some stocks that you want to talk about that did well. I know you were in ARM. I definitely want to go over that for people to be aware. So go ahead.
Well, so I was in ARM. I was last week. I'm trying to pull up the number. So last week, what I saw was a pivot off of 144 that I did not like. It did come on institutional volume. So I exited ARM yet again, not because I don't believe in it, but because remember that, like, as we're talking about here, there's guys that run markets every single day. They have to make money every single day, these desks. So they come in and they come out and they take profits. It ran from 85, I think, to 144, and it looks like some profits are being taken. And because I pay attention, like, that's something that I do. I am very, like, intricate with what I do. I watch moves. I'm seeing a lot of what looks like selling around the 145 area. So I think most likely there'll be a pullback to 115. I'm not even making like a price target call yet. I've just exited out of the position. Something else that I exited out of that I was holding long was Honeywell. So anybody that's not familiar in what they do, you should take a look. But The last 2 months, as a matter of fact, there's definitely institutional selling in Honeywell, which is, if you're not watching that, you should be. I don't know why you're not. GE is another one that I exited out of last week. It's up 400% in the last year, 450% in the last year. A lot of people, they don't look at these big names, and that's why I'm bringing them up, Kenny, because they're not little companies. These are giant companies that have done 450% over the last year.
Yeah,
everybody
100%.
ignores them. Everybody ignores them. They act like it's not like, oh, you can't buy and sell big companies. Oh, yes, you can. GE was another one that I saw a lot of volume come in next week. And any company like that that's up 400% in the last year, I got out of. Something that I did, I was looking at. There's nothing that I'm looking at right now there wasn't anything I was actively buying this week, but something I did start looking into, everybody, and I would encourage you to do the same, is a lot of these cloud seeding companies. If you don't know what cloud seeding companies are, they are companies that control weather. So cloud seeding, you'll hear a lot of people talk about storms being created. It's not fictional. I can list you off a name of the companies now, but I just started looking at them. Next week, Kenny, I'll definitely tell you some of those that I'm getting in on. Basically, what they do is they take a little cloud and they make it a real big cloud, and then it rains. And it rains depending on the amount of crap they're pumping into it. And the reason I think that's important is because a lot of the deserts around the world, they're trying to convert. The Great Green Wall of China, it worked. They started that 25 years ago, and that was back when $1 billion was a big deal. 25 years ago, China wanted to convert desert, so it started planting in these deserts, and they were calling it the Great Green Wall of China. They threw $1 billion into it. It worked. But what they needed to make it work was rain. How that has happened is called cloud seeding. I forget what I don't use the word conspiracy.
I'm going to stop you right there.
Go ahead.
I'm going to stop you right there. You guys are going to have to catch the rest of this on Marathon Money Plus.
All right.
Those stocks that we're going to give you, we got to catch it on Marathon Money Plus. I appreciate you guys listening. This is Derek Invest. Check out Marathon Money Plus on marathonmoneyplus.com. You guys can check it out. I appreciate you. It's going to be up at the same time as this for those who are on Apple Podcast, Spotify, Pandora, on all the podcast platforms. Also, you guys, you heard Derek say in the beginning of this, he has students making money on his platform. I'll let Derek talk about this the last 2 minutes. They're making a lot of money. You see, Derek is not a flashy guy. He can make you 10, 15, 20% and is be consistent. And all those people have been listening to Marathon Money for the last 8-9 years. Derek is perfect for our environment because that's what we're all about.
Right. So yeah, I mean, like, I don't want to elaborate too much because I mentioned exactly what it is that I do and I help people do. And I think Kenny and I are talking about starting some sort of subscription service where we do that, where you can follow, at least a few times a week on when to get in, when to get out, how to scale, how to identify a top, how to identify a bottom. Look, investing doesn't have to be sexy. It can be a hell of a lot of fun. I obviously love doing it. I've been doing it for 25 years. But the truth is, consistency is key. Just like in anything else in life that you're doing, you have to be consistent. You need to have a consistent plan. You need to have consistent discipline. Discipline will outdo luck any day of the week. I know a lot of people that get lucky in markets, but luck gives back in markets, right? So yeah, jump on over to PrometheanInvesting.com. You can check it out. I can tell you the one thing I screwed up in life, in my personal life. I learned how to invest before I cared about budgeting, financial plans. I didn't care about that crap. I make money. I mean, I remember there's like, I can't remember who it is. It's not Cardi B. It's one of them. She said, I don't give a fuck about a credit score. I could be rich tomorrow. Right? That was me. Fuck a credit score. I'll be rich tomorrow, bitch. That's how I lived. It was a mistake. It was a mistake.
Fucking credit score. I'll be rich tomorrow. Yo, guys, peace.
All right.